Welcome to TheoTrade. This is Don Kaufman. It's April 4th, 2018. Let's do a quick review of some of the action that we saw in today's marketplace. And then, more appropriately, let's look for a couple of opportunities in the days to come. First and foremost, I woke up this morning and I have to tell you, a little surprised. Why? Well, this morning, and again, this doesn't look like that much in the chart, but this morning, when waking up, the S&Ps were right sitting at 2575. Now, for those of you, if you've been kind of tuning in and day out, I have been discussing specific levels. Here's 2575, here's 2626. Nevertheless, opening at 2575, got to tell you, a little bit scary. Why? S&Ps were down, between 30 and 40 points, kind of oscillating this morning. You saw the overnight low of 2560. Again, this morning, you kind of thought to yourself, these things are going to retest the February lows. What did we do? Pretty much out of the gate, we shot from one level. And again, these levels I've been discussing, in the midst of some of the volatility that we've seen as of late, we've just really been pinging literally from level to level. So what do? We actually ping and explode to the upside, 2626. And this is what we were anticipating earlier in the trading week. So a little later in the trading week, now it's officially playing out. We're getting some upside movement inside not only the S&Ps, but again, upside movement inside of the Nasdaq. Now, let me give you just a little bit of a broader take in the Nasdaq, because again, I talked about this in the weekend video. The Nasdaq saw pretty extraordinary sell side activity, and that's why we fully anticipated a little bit of a retrenchment, even back up here to 6,700, even 6,800 is well in scope. Now, what I really want to focus on in kind of the days to come are the opportunities. And again, stress this, the opportunities that really will come into play in the next few days. If you've looked at underlyings like Google, all right, Google been beaten up severely, has a bit of a bounce today, but it's only by the tune of 1%. The issue that we have inside of Google and inside of a lot of what I term the monsters of tech, and the monsters of tech, of course, are Microsoft and their Apple and Facebook and Google and Amazon. Those comprise the monsters of tech. All of the monsters of tech, they've got earnings coming out, and the earnings are going to be a little bit prohibitive because the types of strategies that I would like to deploy, right, you want to give them a little bit of time. And if you look 23 days out, you can see the earnings announcement. How can you see it? Well, we looked at it on a chart a moment ago, but in this particular circumstance, you can see we're up to a 38% implied volatility. And if I go out there and use any type of spread, the spread is not going to mature till likely after the earnings. And we all know the earnings has tendency to be a little bit of a gamble. So I have to shy away from some of the usual suspects. Like, I looked at Apple and I'm like, okay, nice bounce. Now let me give you my thought process before we go any further. What I am looking to do in this circumstance is I've seen the sell-off. I'm waiting for the bounce. Something like Apple gets back up, in the neighborhood of like 174, 175. I'll place, a minimal risk short position. I'll probably use an in-out spread, and I'm going to set that up in a number of underlyings. However, you have to get a little bit more innovative in and around what is going to be the earnings window. There's a few things that you can do. Number one, you can circumnavigate the earnings by cruising over to some of the ETF products. No problem there. Why not use the Qs, right? If the Nasdaq continues to bounce, we could probably place a short position, 162, 164. And again, please do not be surprised to see this kind of bounce. I mean, on a percentage basis, let me throw this up on a year-to-date percentage basis. We have just seen a slide. Now, I was doing this again over the weekend we were up 10% on the year, right? And again, this is after some of the February lows. We rallied, exploded to the upside. We've now sold off right there. It's almost 13%. I mean, what'd you think was going to happen? This has been straight down. We need a bit of a bounce at this point. Okay. However, that bounce is something that I am anticipating shorting into, kind of re-upping, if you will, because I had a lot of bearish positions on in this fall, and I've closed most of those bearish positions. You can take the profit when you can and when you hit your profit exit target. So we bounce back to the upside, but in the first sign of a bounce, I'm not jumping in just yet. I want to see if there's going to be some follow through to this. Nevertheless, you're never going to be able to time the bounce perfectly. So let's just get that out of the way, like clear the air, right? You know, in this bounce, oh, is it going to bounce up? Is it going to bounce higher? Listen, you're not going to be able to time the bounce appropriately. So what you're going to have to do is you're going to have to allocate, okay, piece by piece. So you pick a point and say, okay, I'm going to get short a little bit at 162. This is not all or none. That's where people go just what I would call hideously wrong in the marketplace. You wait for the bounce, you allocate a little capital, you got to spread it around. You wouldn't do this all inside of the Qs. Now, there's a few underlyings that I have been eyeing in recent days, and I've talked about these extensively. Let me start with NVIDIA. Why NVIDIA? Well, first of all, its earnings cycle is unique from some of the monsters of tech, from the Amazon, the Google, the Facebook, the Apple, the Microsoft. It's unique in respect to the fact that the earnings are not until May 10th. So NVIDIA on a bounce would be something that I could look to create, again, a short position, and I'd be capable of doing so. You know, you can go out 23 days. You can even go out as far as, again, here's a May 4th expiration. I'll remind you, the earnings again is on May 10th. So the May 4th expiration, you can get away with this. Now, this is not specifically, okay, the strikes I would use. However, the kind of strategy that I'm going to go after in this particular circumstance is coming in here and trying to use an in-out spread. Now, this thing moves around a lot. Listen, we have $26 of expected move. You might want to do something like a 230, for instance, 225 spread. All I'm showing you is the type of transaction that I would probably use. But again, I am waiting for a bit more of a bounce. I mean, hey, today's the first day of a bounce. We're up 89 cents. Please, it's nothing. But if you looked at NVIDIA throughout the course of the trading day, and this thing opened at 214 and exploded to 226, there's probably going to be some follow through to the upside. A very similar position would be in Micron. Now, I talked about Micron as well in some of the recent trade. Again, exploding to the upside in this particular circumstance. If you take a look at this, up again in the neighborhood of 3.5% today. Now, okay, when you start evaluating one candidate versus the other, right, clearly Micron's looking pretty good. Here is a move that has been straight down since the earnings. This is the first sign of a bounce. Any more of a bounce, I'm going to step into Micron and use an in-out spread. Kind of continuing onward and upward over here, let's go over to Adobe. All right, and if you're unfamiliar with Adobe, well, we're going to make you familiar with it right here, right now. Now, another reason that I'm looking at Adobe, it's already through the earnings. So I'm being a little cute in navigating in and around the earnings announcements. Now, the reason I like Adobe, first of all, I already have some existing positions in Adobe. This bounce is making it to add to those positions, you know, categorically for me, a lot easier. The bounce inside of Adobe today is nothing less than spectacular, just shy of about a 5% move to the upside. Again, looking for an in-out spread. Now, last but definitely not least, I've been eyeballing Morgan Stanley. Morgan Stanley, in terms of the financials, has been really the strongest, if you will, again, the strongest, if you will, of some of the financial products. Now, if I pull this up on a year-to-date percentage, you'll see that Morgan Stanley happens to be up just shy of about 3% on a year-to-date basis. If you take a look at the XLF is down about 1%. So Morgan Stanley, at this point in time, appears to kind of be my best bet in terms of a liquid financial product. However, I'm going to differentiate the position that I use in Morgan Stanley. I don't want to be short Morgan Stanley in an in-out spread. I don't want to be short for a week or so. I actually want to create a longer duration short position. In essence, to do that, I will still be carrying then. I would be carrying positions through the earnings announcements. This is where I might go out 44 days, open up the entire option chain, and I will look, all right, and seek out options that have greater than an 85 delta. I'm going to look for a put that has greater than an 85 delta. And the reason I'm doing so is I'm trying to create, right, a synthetic short stock position by buying it in the money put. Now, these days I'm trading inside of an IRA, tax-deferred account. You can't short stock in the IRA, so I have to go out there and I have to use synthetic shorts. One of the synthetic shorts I can do is, for example, I could buy a 60 put. However, at this point in time, again, I am still looking for a bit more follow through to the upside in Morgan Stanley. I'm looking for a bit more follow through to the upside in, for example, NVIDIA, which had its first rally in quite some time. Adobe happens to be, I think, ripe for the plucking. I think Adobe we can go after probably as early as tomorrow. Last but not least on that list, of course, is Micron. Again, we may see some follow through, some legs to this rally. One last point I want to make inside of the S&Ps. We do have another upside level, but people, this is a long way away, and that happens to be none other than 2682. Again, when I say a long way away, that is about a trading day, up to 2682. There is one last level I can provide, and that happens to be just off the all-time highs, which is 2841. Again, looking at that in on a broader take here, it's off the all-time high. It's another key level. Nevertheless, for the time being, right now we're just pinging between 2682, 2626, and down below here is 2575. We've held true to those levels. Right now we're right between these two levels. It wouldn't surprise us at all, okay, to be pinging off these levels again for the next couple of trading sessions. However, at this point in time, I think there's going to be a little bit more follow through to the rally prior to seeing any sell side activity. We all have to agree, tech has been beaten up badly, overdue for a bounce. Thanks everybody joining us here at TheoTrade. Have a wonderful evening. Bye-bye.